There are two critical demand drivers. Most of the emotions of people happen to do with short-term fear, and I call that the fear trade. And the fear trade is predominantly motivated by negative interest rates. Whenever a country has negative real interest rates, that is, what will they offer you at the bank, take away the monthly CPI number, gives you a net number. And tomorrow when I speak, I'm going to explain and show you the math of any time it goes positive, negative, gold goes up or down in that country's currency. So that's the fear trade. And the most important in this long term has been the love trade. And the love trade basically really started getting its arms around the world in 2001 when emerging markets started to take off. When we take a look at this region from Australia up to China, over to India, it's 50% of the world's population, and it's something like 80% of jewelry demand, where gold is given for love. And it's a very important component of the culture of Asia. With the volatility of gold over any rolling 12-month period is plus or minus 20%. It's a non-event for gold to rise 20%, fall 20%. Now for gold to go another 20% after being up 26% year to date, that would be a stretch. So I think gold's going to meander along and probably test the 1350 between now and Chinese New Year. Cash flow, free cash flow. And when you look at the world and all the other gold mining companies on certain key value metrics, such as growth in revenue per share, the Australians have demonstrated stronger growth in revenue per share. Now we track 88 global gold producers. 60 of them have market caps greater than 200 million. When we look at the Australians, they are just much more significant in throwing off buckets of free cash flow, and it shows up in a model called operating cash flow to enterprise value. It shows up in another quant metric, cash flow return on invested capital, and SG&A, that is depreciation, but more important, the overhead relative to the revenue. The Australians are the lowest, along with the South Africans, but in particular here, this is a nation that produces free cash flow. I guess the highlight was just getting to meet so many different people. I'm a big believer that there's two ways to learn: explicit knowledge and tacit knowledge. And the tacit knowledge is going around and hearing about what people think are opportunities and what they think are threats. And it's very important in my mosaic of investing. Same thing, learn more, develop and expand relationships, refresh and reignite other relationships. I think it's becoming more and more significant for peer-to-peer learning and sharing, and that's what takes place at an IMARC event, where you have the best brains in the mining sector, both from producers and investors and executives coming and just mingling and learning from each other. I think gradual growth, nothing spectacular until we get the G20 nations focused on synchronized global growth, not taxation and regulation. So I think that since 2008, it's had a significant impact on global mining activity. So I'm a big believer in the significance of meeting with other like-minded people, where it's peer-to-peer learning. And it really helps you get that sort of quantum leap of how people learn from each other. And what you've done at IMARC in Melbourne is exactly that. There's just so much information in a very short period of time that's going to be very useful for making better and more timely and informed decisions.